Welcome to all of my students in today's mentoring session. And as usual, I'll be starting the session with the weekly sectoral analysis. For the record, we can see that Nifty futures from top to bottom has been able to bounce by close to 6.80%. That is almost 7%. And one thing I think which I had shared today on my Twitter handle and which I saw positive in Nifty and Bank Nifty both was this fall in volatility. All right. Markets have gone up. You can see a decent drop. It's not a very drastic fall. It's not a very steep fall like this. It's a very slow and steady fall. But nevertheless, yes, we can see a fall in volatility, which is a good sign, basically. But only a drop in volatility obviously cannot, mark a bottom, and we cannot say that we already have a confirmed bottom and from here we'll be having an up move, because we need to analyze much more and then we can come to a conclusion that this recent up move was a pullback or we already have a bottom in place. And if you look at the Bank Nifty futures chart, the fall in volatility is also decent over here. I think the average move in Bank Nifty used to be 827, 828 points, which came down to just below then 700 points. On the peak, I think the volatility had crossed literally 1000 points. So now we can see in this recent move, we have many small candles. This is the result of crash in volatility. All right. So apart from this, what are the signs which we can see on the charts? Let's dive into that. And as usual, I'll be starting the analysis from the monthly time frame chart. In the monthly time frame chart, I guess it's very, very clear that the trend is flat. It's sideways. The price is within the dual moving averages and is also trading between these two trend lines. So more or less, I think we are consolidating in the long term. You can see when the RSI is gliding down and then it has gone a little bit sideways. In the weekly time frame chart, I think the trend is 10% down. It is certainly not up because this is pullback. Yes, I do agree that this was a very good candle. But after the pullback, if you see today, all right, in today's weekly close, we do have a small inverted hammer. This inverted hammer is not very big as the size of hammer, but if you see properly, this inverted hammer is coming up at a place where we do have this entire zone, which is a resistance. Now let's check the daily time frame charts. In the daily time frame charts, if you have been looking at my Nifty short-term view videos in my recent week, I have only posted one video, and the reason for that was there was nothing to post actually, because market was pretty much range bound and is making videos, and if there is nothing much to share, makes no sense to me until and unless I'm not adding any value to all my viewers. So basically, I'd told that this particular Fibonacci retracement is going to act as a resistance, possibly 16,600, 16,650 to 16,700. This entire zone is going to work as a short-term resistance, and if you see, Nifty futures has not been able to close that. Close above that. On the top of that, if you check, we do have a negative candle, but this negative candle, just because we have closed in negative and we were positive today, and just because from the positive outlook at around 16,756, we have crashed and we have closed just around 16,602. This does not signal a top. All right. If we have a close possibly above this once again, and if we start sustaining, we can go slightly higher, maybe by 100 points, max to max, maybe by 150 to 200 points. Again, we will be start seeing very strong resistance, not just resistance, but very, very strong resistance over here. On the other hand, rather than going up, if market starts coming down, then I think we can say possibly that this pullback, which we have seen in the last few days, was just a pullback, and not an uptrend. And then we can see some sort of selling coming up. And what are the levels? I don't think so we need to delve into that right now, because we need to wait very, very patiently. Let the market make its first move. We have seen a decent negative day today, especially in the PSU banks, in the private banks. All right. So let's wait and watch for next couple of days. What is the price action happening? Then possibly we'll be able to come to a conclusion, and then I'll be keep sharing in my Nifty short-term view videos. Yes, the trend is certainly flat in the daily time frame chart, and the trend is down in the weekly time frame chart. And then I think the main trigger, if the sell-off has to happen, I think it might come from the banking stocks. So let's now look at the Bank Nifty. Maybe even reality. I'll come to that point later on in today's video. So first, let's have a look at the Bank Nifty. In the banking index, in the long term, I think we are pretty much sideways. If you just forget about the price, I think if you just look at the RSI, it is absolutely flat because RSI literally copies the movement of the price. It's an leading indicator, but it's still made from the price calculation. So you can see complete sideways movement, and in the weekly time frame chart, if you can see, it is facing resistance exactly from the resistance band, which I've kept it on the chart right now over here. This particular candle is not very, very important, but it shows that our resistance band is getting respected by the market. You can see twice, I think, in the last week, we have seen 2 times market tried to test over here. Immediately it was thrown down. Even today, it tried to go up higher and close above this. But even before testing the upper band of this channel between 36,481 and 36,208, we had a pretty steep sell-off. And I think we opened at somewhere around, you can say, 36,000 to 36,000, and we closed somewhere around 35,369. So this is a pretty big fall in an intraday if we calculate the difference between the open and the close. And if you see properly, especially this candle, and if you compare the day before yesterday's candle, it is an inside bar. And today what has happened? We have a close just below yesterday's low. So this is a breakdown in the daily time frame chart. But only this much breakdown, I don't think so. It will be pretty much strong enough to drive the markets down. I think we need one more day's movement. And again, this particular trend line, which you can see over here, which used to work as a support, we closed above this, and now this same trend line is now giving a support. It used to be a resistance, right? Because we closed below it. Then again, price has gone up, and now it's trying to come down. So this might give a support. And the reason for that is we do have a gap over here. So the gap acting with the trend line, it will give even more importance to that particular level. So I think we need to wait and watch. Maybe in a day or two, we'll understand what exactly market wants to do. Now, if you compare PSU banks and private banks, both are looking pretty much negative, but in absolute short term, not in the medium term, in the absolute short term, as per my analysis, I think PSU banks are a little bit more weak in compared to private banks. Yes, even private banks are showing signs of that downtrend is visible in the weekly chart, even in the daily chart. Daily chart, I think the trend is flat. In the PSU banks, also the trend is flat, basically in the daily chart. And in the weekly chart, the trend is down. I completely agree. But somehow in the short term, PSU banks are certainly underperforming the private banks. If you see just by looking at the price, there has been a steep rally in the private banks, but PSU banks, they saw just a little bit of rally, and then they were slightly slanting on the sideways. And I think ICICI Bank and Kotak Bank in the private banking space, these are the 2 banks which are slightly better placed in comparison to other banks. So if someone is trying to pick up stocks for swing shorts or short-term trading on the downside, I think you need to look in stocks other than these 2 stocks, other private banking stocks, but try to stay away from ICICI Bank and Kotak Bank. That's what notes I have made today. And PSU banks, I think you can concentrate on Bank of Baroda and SBI. All right. Now metals, what I have noted over here is I would like to avoid metals completely. And in doing so, it could happen that we may see a downfall, we may see a up move or a consolidation. Probably in all three scenarios, I would like to avoid. Now, if it is a sideways move, obviously I'm not a trader who's going to make money in the sideways move because I'm a directional trader. So I will not make money if the price goes sideways. Either I need an uptrend, either a downtrend. In the up move, I would not like to buy because the trend is flat or down. And if there is a short-term pullback, I'm not a trader who buys pullback. So again, that is not a very good scenario for me. Now, if the price move down, okay, in the metal stocks, if the price moves down, then why I'm saying that I want to avoid? And the reason for that is the weekly time frame chart. In the weekly time frame chart, if you check properly, we do have a positive divergence. I think in the last week we saw, and then we have a small candle. And this particular divergence has come up at a support. And weekly charts are a little bit more important than the daily charts. So as a trader, I would like to select which particular index, which particular stock I would like to trade into. And metal is the index which for time being, I would like to stay away from. Fine. Autopack. Now, Autopack is a index, I think, which has been able to surprise many people, including me. Overall, it's a good looking chart. If you check the monthly time frame chart also, yes, it is looking impressive. You cannot deny that. In the weekly time frame chart, it is looking okay because what has happened is we do have a shooting star over here. So things have a little bit spoiled just for the current week. I think next week we'll understand what is happening. And what I understand is if the sector wants to do well, it will need some sort of consolidation, maybe a short-term dip, maybe a consolidation. But after that consolidation is over, after that dip is over, okay, because you can already see a short-term correction which started from this particular day. This is 1, 2, and 3rd day. So will this correction continue down a little bit more or it will be sideways because we can see a trend line support over here. So after a consolidation or a short-term dip, whenever it is over, when it starts moving up, I think you will get opportunities for swing trades. But again, be very, very sure about the picking of stocks. Don't just jump in any stocks. Just pick the winners in that particular index. Finance, I think it is looking pretty much weak. We'll have a look at the weekly time frame chart, but before that, if you see, we are already into a resistance zone and we can see signs that 1, 2, 3, 4 candles all have been spinning tops, which is a sign that there is some sort of indecision in the market. Market itself is not confident where it wants to go, and then suddenly slam, we have a sell-off today. So if the sell-off continues for next few days, you will see some decent amount of opportunities on the swing trading scenario. Again, the trend is certainly down even in the weekly time frame chart. In the monthly chart, you can clearly see that the trend is completely flat. IT pack. Now, IT pack is also one pack which I would like to avoid trading. And the reason for that is basically we do have a hammer over here. Okay. And this hammer has come up at a zone, at a level where we do have decent supports. First is this retracement, then these wicks you can see. So from this entire zone to this zone, this is a very good support. Number one thing is that. Number two thing, if I check the weekly time frame chart, I think I had shared this in my previous weekly sectoral analysis that we do have a good hammer candle over here, and the RSI is in the weekly time frame chart, it is close to 30, and even the prices are away from moving averages. Generally, this is not a very good risk reward ratio to go short, so I would leave alone this particular index. Yes, the daily chart is looking weak. I cannot ignore that. I cannot deny that. But when the higher time frame charts are not sharing the same story, I think I would like to stay put. I would like to avoid this sector. And even if it acts opposite to my analysis, and if it goes down, I'm not going to, feel any sort of remorse that I did not take a short side trade in IT and I missed an opportunity to make money, because ultimately I'm going to stay strong with my analysis and I'll go with my analysis. That's it, because you need to marry your rules and not the stocks. Pharma. Pharma is again, I think, looking weak, and we can certainly see some sort of support level over here. And if the support is broken, obviously you will see some downside in this particular sector. In this entire sector, I just can see one stock which I would like to share. Other stocks, I didn't find anything much. I think Sun Pharma is more or less in a downtrend right now. And it is very surprising that after, you can say after a down move, we have a high wave candle, and high wave candles come up at a place when the sector is looking pretty much overstretched on the downside or either on the upside. Now, this was a downtrend. So actually prices should turn up, rather than that next day we have a sell-off and then price picks up. So the prices are going all over the place. It's just sideways. But I guess anytime if prices trade in this zone and the selling continues in the in the pharma sector, then we will see some sort of selling coming up in this particular stock. All right. FMCG pack. FMCG pack, as I have maintained my stance on this particular sector, it is looking very good, even from the viewpoint of long term, and even medium term, it is looking okay. Long term charts are much better. And in the daily time frame chart, if you look, it's looking fine. The very surprising thing is the monthly time frame chart is looking much better in comparison to the daily time frame, because if you see this chart, you can see that prices are literally near all-time highs. But when you come to the daily time frame chart, we are still a little bit way below than the all-time high, somewhere over here. So I think the trend is up, but I think we are lacking in momentum. One classical example I would like to give you is Hindustan Unilever. This particular stock I had shared in my weekly sectoral analysis just before a few days, somewhere over here. And if you check with this particular date and price range indicator, it has rallied by close to 6%. So it was a pretty good, decent short-term swing trade. And after that, you can say after that short-term run-up, rather than staying there, it came down. And now it has formed a hammer again a high wave candle. So it is consolidating. So we are lacking in momentum. If you look at ITC, ITC is also a stock which is looking very, very outstanding, according to me, but some sort of consolidation is happening. I think if the stock dips and it manages to remain within this range, and this range is, by the way, 271 to possibly 269 to 70, somewhere around that, just couple of rupees range. If it manages to remain within that range and doesn't close below that, maybe then you will see a slow, very slow possible upside move coming up in this stock. And this is a short-term view. This is not for positional or something. Realty pack. Realty pack, in the monthly time frame chart, the trend is flat. You can see prices are slightly away from the recent long-term support. So we have some supports, we have some space to go down. And in the weekly time frame chart, you can see the trend is certainly down. In the daily time frame chart, the trend is flat, and consistent amount of selling is visible from this zone. Even if you see on this day, it was trying to test this zone. It was not able to do so. And again, in last couple of days, you can see some sort of selling has come up. So if this sell-off continues, it's not even started, it's just consolidating. But if it continues on the downside, if it starts on the downside and then continues, you'll be able to find some good, decent swing trades in the realty pack. But be very, very choosy about which particular stock is you're choosing. I think you should keep a watch on DLF. DLF is looking a good perspective. swing trading opportunity, I think you should open your trading systems and you should have a look at it. Consumption pack. Consumption pack is flat. The trend is flat in the long term. All right. It's very, very slow in comparison to other sectors. The sectoral index of this chart is very, very slow in terms of coming down. And if you check the weekly time frame chart, the trend is down, but in the last 3 weeks, in last 2 weeks, there was some sort of pullback. These two candles, number 1 and 2, and this is the first candle in last 2 weeks, which is negative. Now, if you see the prices start coming down, you will see some decent trades in the consumption pack. But again, find out good stocks. The reason for that is you can see a lot of short-term bottoms over here. So all these bottoms might act as a support. So if you pick just randomly any stock and you just go short in that, you won't be able to make money. Find out the proper risk reward ratio, find out where is the support resistance. The reason for that is there are many stocks in consumption pack. You cannot just open the sectoral chart and just cannot open any stock and find a good trading opportunity. Try to find out in 2 different stocks which is a better trading opportunity, which is a better risk reward, and then initiate the trade. Mid-cap index. Mid-cap index, I think the trend is flat, and what is happening is this particular level, the 23.6% Fibonacci retracement, is giving tremendous amount of support to this particular index, and the reason for that is very, very simple. This trend is humongous in comparison to other trends. Generally, when the uptrend, recent uptrend, because in the monthly time frame chart, this is the recent uptrend. If it is very, very big in terms of length, then generally the 23.6% Fibonacci retracement works as a very good support. In the weekly time frame chart, the trend is still flat. It's down. We can see very, very properly there is some sort of confusion between bulls and bears, because this is the first candle which is bearish, the second candle which is a little bit bearish slightly, third is bullish, which is a hammer, and fourth again bearish. So I think the price is all over the place, and it will need to close below this level. If it closes below this level, I guess this is the support, then we could test somewhere over here. I think, and this level is 26,800 or something. So we could see 8 to 10% correction in the mid cap stocks, or even maybe more than that if the recent lows are broken. All right. So that's my analysis for the week, and I hope this video has added value and it will help you, all of you, especially people who are watching this on the YouTube. And do let me know by your comments below. If you have any questions, I'll try to answer them. Thank you. Trade well and stay safe.